Hi, good afternoon. Welcome to Treasure Coast Treasures. My name is Melissa Conrad. I'm a real estate broker associate here on the Treasure Coast of Florida. Been helping buyers and sellers since 2003, and I've had some fantastic questions during that time. So what I decided to do was put together a collection of videos asking the best questions to our best associates here local. Today I'm here with Matt McGarr. He's an insurance agent at State Insurance Agency, and I've had the pleasure to work with him quite a few times, and my clients are always impressed. So thank you, Matt, for joining me.
Well, thank you for having me.
And we would like to talk about the common insurance misconceptions, because there's some very interesting questions out there, and I've got some good ones for Matt, and looking forward to getting started.
Yeah, so am I. So the common
well, tell us a little bit about yourself first, please.
Well, how about it? So I have been doing insurance here on the Treasure Coast since 2015. I actually graduated college and started doing insurance right away.
You're local.
I am.
Yes.
Been here since 2003.
Fantastic.
And so I have roots here. I know the area. And so yeah, I've been doing insurance since 2015, so 3 years now. Started with State Farm, switched to State Insurance, and I'll actually have my own insurance agency open in Port St. Lucie in June of 2019.
Congratulations.
So if you are watching this in June of 2019, give me a call.
Congratulations. Give him a call anyway. We talk all the time.
Exactly.
One of the biggest questions I always get and misconception is replacement cost versus market value. Everyone thinks they're the same. So if you could please just clarify that for us, I would greatly appreciate it, and so would the viewers.
That is something that I get a lot when I go over the dwelling costs or the dwelling coverage for their house. They say, well, I paid $225 for this house. Why does the dwelling amount need to be $260, for example?
Exactly.
Aren't they the same thing? The answer is no. Dwelling replacement cost is very different than the market value of your home. So the replacement cost is the cost to rebuild the house with materials of like kind or quality. It's what you would pay a contractor to rebuild it, which, as you know, is very different from the market price of a home. And I will use an example to illustrate this point.
Cool.
You could take a house that has a replacement cost of, let's say, $250,000, and you could put it on prime real estate right in Miami Beach, right on the water, and it's probably worth $1-2 million. Take that same house and put it in the middle of nowhere in Kansas, and it might be worth less than $250. But the replacement cost is very similar for both of those houses.
Oh.
So that's an example of how the market price, which is subject to things like supply and demand and all of that,
location,
exactly. The market, lower interest rates would produce more of a buyer's or more of a seller's market, which
Yes.
would cause houses' price to inflate, which would have nothing to do with the replacement cost.
No.
So that's an example of how the replacement cost and the market value are very different things.
Thank you for clarifying that.
Well, you're welcome.
Hi, Melissa Conrad here, continuing discussion with Matt McGarr at State Insurance. And what happens if your house is underinsured? Then what do you do?
That's a question I get a lot too. And there's a common misconception here where when I have the conversation with someone and I explain if your house is underinsured, you may have to come out of pocket tens of thousands of dollars to finish rebuilding it. And something that people often say is, well, if that was the case, I would just take the money and walk away. Here's the thing. While you can do that, if you choose not to rebuild the house, you will not get the replacement cost valuation of the house. You will get the actual cash value, which is a very different thing. In an example where the replacement cost would be, let's say, $250,000 to build it new, the depreciated value or the actual cash value may only be $150,000, for example,
I see.
right? So if they choose to walk away, they may think they're getting that $250. They're not. In this example, they'd only be getting that $150. So they'd be cheating themselves out of $100,000 in that example.
Wow, thanks for that clarification.
Absolutely.
Yeah.
Thank you.
Thank you. Could you do me a favor and just elaborate about liability insurance?
Absolutely. And there's another common misconception that I get here. A lot of people think that your liability on your homeowner's insurance only applies to incidents that happen inside your house. A lot of people don't realize this, but that's actually not the case. For a homeowner's policy, it applies to incidents that are stemming from personal liability anywhere in the world. So for example, if you like to golf and you hit somebody with a golf ball by accident and you injure them, that is actually, even though you were on the golf course, that is actually a
Not at your house.
Exactly, that's a homeowner's liability claim. Let's say you are shopping at the grocery store and, God forbid, you bump an old lady with your cart and she falls and breaks her hip and decides to sue you. That also would be covered under your homeowner's liability.
That's interesting.
So exactly, it's good to know that it's not just for acts of liability within your house, for a homeowner's policy. The only exception to this is if you own a rental property. For a rental dwelling policy, it is only in the house. But for a homeowner specifically, anywhere in the world.
Okay, thank you.
Yeah.
Continuing conversation with Matt McGarr, State Insurance. We're going to switch gears over to auto insurance. And one of the things that we all say is we want full coverage. Can you tell me what's covered under full coverage?
I get this one a lot. And I have to tell you all, there is no such thing as full coverage in your insurance policy. If you read the policy form, you will not see the words full coverage listed anywhere.
I've noticed that.
They will say things like coverage to the specified limits, but never full coverage. Usually when people tell me that regarding auto insurance, I know what they mean, and they mean usually comprehensive and collision coverage, which is what's required by a lender. However, if you have the state minimum coverage plus comprehensive and collision, and you think you have full coverage, let me tell you something. You don't have bodily injury, you don't have towing, you don't have rental car, you don't have medical payments coverage, and even if you did have all of those things, there's still always a potential claim that exceeds whatever level of coverage you have. So your coverage is never full. If you don't take anything but one thing from this video series, is to never use the words full coverage again.
So stop using the wrong terminology.
Thank you.
Thank you very much.
Yes, ma'am.
Can we talk about something else? No fault. What does that mean? What is no fault state?
Yes, that's actually a big misconception as well. Here's what no fault means. It means, and again, it's your personal injury protection insurance, and it pays whether you hit someone else or whether someone else hits you. It doesn't matter who's legally liable, so there's no fault at play here. It's just the first 80% up to the first $10,000 for your medical expenses is covered under your personal injury protection regardless of who's at fault. That's
the
why it's
particular person that was driving. So
Yes.
my PIP would cover me.
Exactly. Up to $10,000.
If the person didn't have insurance, then what?
If they don't have insurance and they cause the accident, then they are out of luck, unfortunately. If they have health insurance, I guess it would pay at that point. That becomes out of my wheelhouse. But if the other person's at fault, even if you don't have insurance, they're still going to have liability. If they have bodily injury liability, you could still be covered under their insurance if they're at fault. Yeah.
Well, thank you for that too. One thing that I've heard is that bodily injury is not required in the state of Florida.
That's correct.
What do you tell someone who says, I don't have anything, so I don't need it?
I hear that a lot. People say, well, I have nothing that they could take anyway, so I'm not worried about it. Well, I would have 3 questions for you. First is, do you work? Because if you do, most of us do, especially if you're trying to afford insurance, I hope you work. The state can garnish your wages 25% for up to 21 years. So your future income is a huge asset that they can garnish, again, 25% of for up to 21 years.
21 years, that's a long time.
Quite a long time. Also, do you own a home? Because if you do, while they cannot force you out of your home, they still can place a lien against it so that when the house is sold, they will get paid before you do.
And your realtor will find it.
Exactly. And then also the last one would be, do you enjoy driving? If you do enjoy driving, then the state of Florida can actually suspend your license and registration until you get a payment plan to pay them back.
You won't be driving to work.
Yep. And also, in that event, you would have to file what's called an FR44, which is financial responsibility, I think is what it stands for, which would mean that you would have to potentially have much higher limits, and then you'd have to pay a lot more for it than if you just got it in the first place.
Carry the proper insurance. That's the
goal.
That's the goal. Thank you, Matt.
Thank you.
Thank you for taking the time to watch my informational video with Matt McGarr of State Insurance about misconceptions that people have in regards to their home and auto policies. Mr. Yo and I would love if you would hit this subscribe button below and share the video with your friends and family. Know that you can always reach me for a wealth of information, and if I don't know the answer, I know someone who does. I've been here since 2003 selling real estate, helping buyers and sellers accomplish their dreams and their goals. My name is Melissa Conrad, and I own MelSellsRealEstate.com. And if you want to reach me by cell, you can dial 772-240-2589. And I hope this video finds you well, and you have a great day. Thank you.